I'm here with Matt Smith, and today we're going to talk about our Tesla stock report that Matt wrote. And I work with Matt quite a bit on this, but Matt and we have a ton of hours in Tesla. I think I have at least like 3,000 hours. I was talking with you, Matt. How many hours do you think you're in Tesla?
It's got to be more than 3,000. Yeah, I know I'm not at like the 10,000 hour level, but it's a lot. I mean, basically, end of 2019 and onward, I was just totally obsessed with it, and probably less so. I've diversified my interests a little bit in the last year or two, but tons of hours in it for sure.
So, you know, obviously we're a bit obsessed, but we feel with investing, it's important to dive deep into the investment you're looking at and really know the company, know why you're investing in the company, and really seek to understand it. Because like if you don't view it differently than Wall Street, why would you then invest in an individual company if you don't think you see it differently than them? So I'm going to share my screen again and show you our report, and we'll take you through it. You go to hffinancial.com/Tesla valuation, kind of have this placeholder page. You can click on this. It'll take you to a PDF of our report. And first thing we get into beyond the preliminaries is just high level risks and high level upsides or reason why someone may want to invest. The opportunities, we have to look at the risks because we manage money for other people. And then we get into how Tesla's financials have changed over the years. And at a certain point in 2018, and this is when Matt was involved with Tesla personally, Tesla was really struggling to ramp the Model 3. And probably at that time, most people thought Tesla had no hope in matching what Toyota was doing. But what we can see now is this is Tesla gross margin versus Toyota. Toyota's around 15, Tesla above 25%. This is through Q3 2022. Operating margin, net margin. Toyota would love to have the financials of Tesla. And the reason for all of this is that Tesla has surpassed the Toyota production system, in our opinion. So we had this exchange here with Brian Johnson and Elon Musk from 2017. But one of the things we focus on in the report is the increasing importance of software in driving Tesla's profitability moving forward. And we'll come to that by the end. We're going to keep this video to about 10 minutes. And then we begin to talk about Tesla Energy, providing some context, some history. This is Tesla's deployed gigawatt hours in 2022. This is the capacity of their plant in California, which is just getting ramped up right now as we speak. So this plant should be a game changer for Tesla's energy division. Any comments you want to make here, Matt?
Yeah, maybe one quick anecdote. I had another version of this chart which tried to show the 2030 targeted capacity of about 1 terawatt hour, which would be more like roughly 25x the height of the green bar. But when I did that, you couldn't even see the red bars of 2020 through 2022 actual deployments. But it is kind of as stark as the new Lathrop plant is, and how it's just very obvious how impactful this will be to the company's financials. If you just then think of doing the same thing again to that green bar and think of like how radical those implications are, it's just kind of crazy to think about how much storage they're going to be putting out there.
Yeah, as we mentioned, 3 terawatt hours is 75 times bigger than 40 gigawatt hours. Stephen
But the
Mark,
3 terawatt hours is for automotive and hardware,
yeah.
and storage. So yeah, if it's, you call it 1 terawatt hour maybe for stationary storage to keep it apples to apples with that bar. But yeah, I mean it's just no matter how you slice it, it's a staggering ambition that they have.
Mm-hmm. Stephen Mark Ryan did a breakdown of our report. We were focused more on long term, and I think that hurt somewhat our report getting out there, because we weren't focused on the short term drama with Twitter or Elon selling or macroeconomics, all these small things. We're focused more on longer term. People said we didn't focus on the competition, but what we showed with what Tesla did versus Toyota, Tesla's created a totally new paradigm. Do you want to talk about the competition for a second, Matt?
Yeah, I mean it is kind of funny because we talk about this in the report. Toyota was viewed as like the high bar, that if Tesla really got their act together, then maybe in 5 or 10 years from 2017, they'd be able to get to like close to Toyota's margins. Now Tesla's net margin is roughly equivalent to Toyota's gross margin, which is absolutely nutty to think about. And then on top of that, I mean, there's this acceleration of software profits, which we were talking about earlier. So yeah, like the competition, I think, is just playing a different game than Tesla is playing. So like for sure they're in the same market. When Tesla cuts prices, or when any of the other automakers cut prices, it impacts everyone. So it's not like Tesla's just an island, but they are innovating at such a rapid pace that like they are their own like they're trying to catch their own level of profitability, and see how like they're their own competition
Right.
is maybe the way to think about it. Nobody's pushing Tesla as hard as Tesla's pushing themselves.
So Jim Chanos has been critical of Tesla Energy, saying that it's a small market. But what we know is that based off of these interconnection requests and these queues and these waiting times, is that battery energy storage, which is the Tesla Megapack, what that addresses, the stationary storage that helps utility grid scale. This is limited by supply, the supply of these gigantic batteries. And this is changing with the prevalence of lithium iron phosphate batteries. So this chart's going to get even crazier, probably. We talk about the Inflation Reduction Act, which definitely helps with pricing, helps with demand. It gives some offsets for people that purchase systems, things like that. Here we're looking at pricing a mega pack, which changed. So it used to be that mega packs were priced around the same level as the cost, and this is partially why Wall Street has ignored it, because it wasn't really profitable for Tesla. But the pricing has gone up. It's lower than $500 per kilowatt hour today, especially if you buy in bulk from Tesla. And then we talk a little bit about different battery chemistries, and lithium iron phosphate is the lowest cost one. And cylindrical is lower than prismatic or pouch. So if Tesla can figure that out, they might have a monster on their hands. And then there's all these different services that and use cases for Megapack. But one thing I want to talk about, Matt, was the limits that we're placing on the model, where Tesla's goal at Battery Day was 3 terawatt hours of capacity for both auto and energy storage, where our projection, when you combine auto and energy storage, is limiting that to about 1.5 terawatt hours. And that's based off of our concerns that lithium mining may be a bottleneck. Right now, the huge margins are in lithium mining. So I'm a little skeptical that refining is the bottleneck. Tesla is getting into refining, but they may have just made another deal with a miner. The other part is around execution. Is Tesla is just moving into such a massive scale, it may be hard, increasingly hard for them to execute on all that. Do you want to comment briefly, Matt?
Yeah, I mean, the target that Elon has laid out was 20 million units by 2030, and if you do the math, it's roughly 1.5 terawatt hours for auto, and then 1.5 terawatt hours for stationary storage. And we've seen time and again with Tesla that a lot of the goals are achieved, but not on the timeline that Tesla initially was shooting for. So we think it's certainly possible that maybe they hit 20 million units in the early 2030s, but for purposes of doing evaluation, you don't want to give kind of full execution credit for a very ambitious goal. So we think that there's upside to our valuation, but also some downside depending on how things go.
Okay. One other insight I want to share is just the valuation portion for hardware versus software and energy storage. So when we did our valuation, we come to a valuation per share of $383 being the present value based off of where we think the business is going to be in 2030. Of that $383, what portion is Megapack and Megapack services, and what portion is FSD, Matt?
Yeah, so we're using an overall enterprise value to EBITDA multiple of 20 times. And so if you just use that same multiple across the EBITDA generated from each business, you get $130 for the automotive business, just the hardware, $147 for full self-driving, and then $105 for the energy, hardware, and services. That said, I mean, it probably would be prudent to use different multiples for those different parts of the business. So, I mean, the auto hardware is going to be growing at a lower rate in 2030 than the energy side of the business is, just for one example. So you might want to adjust those up or down a little bit, but that gives you an idea of the kind of order of magnitude that we're talking about. So to me, it's like maybe one of the most interesting things is, we're calculating a value of the, automotive hardware business at $130, which is lower than the current price of the share. So when you hear a lot of the kind of bears out there talk about, well, like I'm using wildly optimistic assumptions and I still am getting a value lower than today's share price, so there's no upside. It's like I can kind of understand where they're coming from when they do that exercise, but they're also assuming that full self-driving doesn't get any better, in the next 7 years, which seems like a horrible assumption to me based on my own experience using the product. And that energy just won't be material to the company's financials, which again, if you're looking backwards at the company's financials, I understand how you can come to that conclusion. Same thing with full self-driving, but that thesis doesn't hold water if you are looking at the actual details of what they're planning and the pricing that they have and the contracts that they have. So I think there's some really exciting growth opportunities that are being heavily discounted by the market right now. So it's one of the reasons I'm so optimistic about the stock.
And this is precisely why Matt and I have spent so much time on Tesla through the years. Is you have to be able to look forward to understand, the value of the business moving forward. And it's not an easy thing. It's just looking at the past and just assuming the past stays the same. So that's all we got for you today. Hope you enjoyed the report. Curious for more feedback. Anyhow, take care, and it's been good talking to you.